Hey everybody, Chris Parry from EQUITY.GURU here. Sorry for my voice, I've been fighting a cold for the last couple of days. Look, I wanted to quickly reach out today and drop a little wisdom on a company that we've been talking about for a while called Medexus Pharmaceuticals. Those that aren't familiar, Medexus is a company that licenses medications that can be sold in North America that are approved elsewhere in the world, sometimes approved in the US and Canada, sometimes they need to go through a process. Generally speaking, these guys are projecting about 120 million US revenue annually, and that projection has been growing slightly but steady for the last couple of quarters. Q4 is out soon. Why talk about them today? Well, a couple of weeks ago, these guys got hit with a short attack. Some folks out there were worried, I guess, that their short-term debt was coming due in July and October, and that the company only had 10 million in the bank, needed to cover about 38 million thereabouts, and were concerned that they might not have enough cash and might have to go into death spiral, financing, etc., bankruptcy, sky's falling, dogs and cats living together. Well, so we had an interview here with Ken Dontamont, the CEO of Medexus, MDP, where we put it to him, like, what's your plan to get through this short-term debt juggle? And he said, look, it's not a big deal. We've been laying it out in our quarterlies that we are talking to institutional lenders about moving from a short-term to a long-term debt, buying out this debt that exists, and there's no panic. Like, it's just a process. We took that debt out initially to build the company. We have since built the company. It is now generating 9 figures in revenue US annually. And so this $38 million or so that needs to be covered, it's not a big deal. Well, the proof is in the pudding. The company just announced that they've gone out and secured refinancing from Bank of Montreal, no less. BMO has decided to give them a new bank debt, including a $35 million term loan, $3.5 million US revolver at 8.6%, which replaces its senior secured credit facilities of 11.3 and 8.78% that were maturing in July. Let me put that into the TLDR for those that couldn't keep track of all that wordage. They were paying 11.3% and 8.78%. They're now paying 8.6%. It was maturing July 2023. It's now maturing far further down the road. I'll let the emergency services get through before I continue. Okay, so the credit agreement includes yet to be committed accordion facility of $20 million that, when secured, should replace 50% of the outstanding, fully accrued $40 million convertible debt instrument. The remainder $20 million the company expects to expunge using existing cash plus cash flow from operations before the conversion date, which is October of this year. So I'm quoting there an analyst at Raymond James, who has decided that this should be price targeted at $4 as a result of this financing. Now, MDP, if I was to go have a look at it right now, it's $1.69 to $1.80. So there's a bit of a spread there. Let's call it $1.80. And Raymond James is saying it should be bought up to $4 at this point. I agree. This is a company that has built what it said it was going to build, how it said it was going to build it. If you look at the shares outstanding on this thing, you're looking at about 20 million shares out right now. So that is a market cap of 33.6 million. A market cap of 33.6 million Canadian on 120 million US annually. Now, admittedly, MDP isn't hyper profitable at this point. It's pretty much break even, but that's fine. There's no risk there. It doesn't suddenly have a massive payment that it's got to bust out or else. It's got time until January to see what happens with the stock. If the stock stays where it is or goes much lower, they can use cash and the credit facility and wipe out that debt that comes due in October. Replace the short term with the long term. If the price goes up to a place where they feel comfortable, maybe they'll use some share equity to wipe out that debt. But it's a maybe, only if it's a good situation. And with only 20 million shares out and the insiders at the company owning 12% of all the shares outstanding, there's every reason not to dilute unless it's really beneficial to do so. Those that thought this company was suddenly going to be trapped in a debt spiral, this is evidence that that's not happening. And it's exactly what leadership of the company said in the last financials and the previous financials. Previous financials, they said, we're opening conversations with institutional lenders to deal with short-term debt. The next conversation they had with investors, they said those conversations are progressing. Now, they've dropped the news that those conversations have culminated in a great deal. Less interest, as much debt as they really need to get through what they're currently getting through. No need to go out and raise money in the short term. No need to turn any of that debt into equity and dilute shareholders. Everything that they've announced today is what you would hope they would announce if everything was going to go right. There's nothing that sticks out as a little edge that needs to be shaved off. There's no dark horse of the apocalypse. There's no need for any sort of ridiculous financing that might plunge this thing into a downward spiral. All the people that said, and I say people in quotes because most of the accounts were fake accounts, all of those who said that this company was going bankrupt should be taken out back and beaten with a reed, because clearly they're not. Clearly what's happened here. Let me tell you this. If there was any risk that MDP was going bankrupt, do you think BMO comes along and refinances them at a lower interest rate? Come on, man. Like a longer term debt with a lower interest rate, that is the win-win of a generation. That is some handy management from Medexus Pharmaceutical. So today it's at $1.69, $1.70. It's at about a $33 million market cap. That's nuts. And that short, by the way, that they had a couple of weeks back, got absolutely beaten to death the following day with the help of yours truly and a whole bunch of other people who understand that this company is actually on the great place. So, hey, you want to go for another short attack? Bring us that cheap stock. We'll be all over it.